Now, I've been too early on Disney. We rang the register on this one for the Travel Trust last year. And then when it came all the way back in, I said, I got to start buying it. Unfortunately, because I mentioned this morning on television, I wasn't able to buy it lower than the other stock that I had bought. I can only tell people that's what I want to buy. And by the way, if it is down here next week, we're going to buy a bunch. But it's time to stop conflating speculative stories with investment-grade stories. Many stocks that have been annihilated here belong to companies that don't have much in the way of earnings, companies that mostly trade on hype or hope. You got all the SPAC plays, hundreds of them, of which I'm hard-pressed to find 3 or 4 that might be worth owning. There are all the recent IPOs in the last 18 months, nearly all of which are uninvestable because the valuations were inflated by the private equity venture capital investment banking complex. Crypto, which contains the most egregious excesses, including Dogecoin. I think Dogecoin is a comedy, but as SEC Chairman Gary Gensler told us, it needs a lot more disclosure, a comedy with disclosure. The problem with crypto is that there's no floor, and we know almost nothing too cryptic. With stocks, at least we know how many shares exist. All these speculative assets keep getting put through the meat grinder. That's what's really going on. Now, of course, they got some good ones today. They're out of style, though. But you just can't extrapolate the weakness of one company, which is done very well, Netflix, with a whole host of other companies with great brand names that make fantastic products and generate good earnings, like Disney.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.